Good evening, everybody. Could I just confirm everyone can see the slide property investment event, which is the introductory slide, and can hear me correctly? I'm just confirming we've got sound and visual. Wonderful there, Trond. I'm really sorry, everybody, for the technical troubles we've had tonight. Everything was ready to go, and we're all according to plan, and then we had some issues with our system. We've got a lot of you online tonight, so it did come down to volume, and we've got things organised and ready to go now. So, Tron, you've said we're ready and ready to go. I've only heard back from you, but I'm going to assume everything is okay. Thank you, Michael. Wonderful. Okay, so firstly, my name's Jacob Field, and I'm founder of Ripehouse. We started Ripehouse in 2011. I really thank you for your time this evening. I'm really excited to bring you the content because it's something that, in talking and working with investors, and I'm an investor myself, a really difficult question that we sort of have to answer if we're going to invest in really high performing and high potential with lots of upside markets. We might not be overly familiar with them. We have to sort of try and wing it on the fly and learn on the fly to process these remote markets. So the focus of this evening is going to be how to become local area property experts for remote markets that we might not have been to before and we might not actually visit. And the key here is, you don't want to be spending a year analysing a market and then missing out on the opportunity. So it's how to analyse these markets quickly, efficiently, and I'm just having a couple of notes here. Jenny and Eddie are having problems with visual and audio. I'll just might mention if anybody else is having an issue with either window, please refresh your window, and I think that will solve things. If some of you are actually jumped onto Ripehouse support, we've got live support within the site, and Anna is online with me here as well to help with this evening, and so we're both acting very quickly in doing this. So yeah, it's all about understanding these remote markets because that's potentially where the opportunity lies. If you're increasing your catchment area to Australia-wide, you're opening yourself up to invest in the absolute key highest potential, highest upside suburbs at any one time. You're having to understand and develop these systems to be able to process them efficiently. So that's what tonight's all about. I might move on to the next slide. I'm going to take you through some research. I'm going to introduce the process that I use in understanding local remote markets as a local would, and then talk about how we'll foster a Ripehouse community that we can support each other and move forward. So I'll jump right in. A little bit about me. Okay, so yeah, my name is Jacob Field. I've been investing since I was 19. I bought my first property in Tasmania, which is now where I've actually moved my family back to. I currently own and have purchased properties right across Australia, and I guess you could define me as a DIY property investor. So do-it-yourself property investor. I really like educating myself, empowering myself with knowledge. It's a continual learning curve. It's a continual journey. My investment strategy is flip-flopped back and forth. I've learned things. I've reprioritized, moved in one direction and then had to reconsolidate and move in another direction. So I've obviously made mistakes. Currently, and since 2000, in the last few years, I've been able to escape the 9-to-5 on the back of my property portfolio. Founded Ripehouse in 2011 as a property investor, originally for myself. I've moved to the Sydney market. I found it really difficult to understand price dynamics within suburbs in Sydney as a new person looking to invest there. Ripehouse was an idea. We're now in version 3 of Ripehouse, where helping me to understand these remote markets potentially as a local would. And as I say, that was version 1, and that focused on where amenities were and how amenities potentially impact property values. Things have moved on, and now Ripehouse is now in 2015 into version 3. Yeah, so that's just a little bit about me. I have been investing for over 10 years and do currently hold properties across Australia, and some that I actually haven't visited before. Some recent purchases in Dubbo, as an example. Jumping in, so the Ripehouse site, I do, it's not just about, the core of the site is about learning, and it's about helping each other as DIY property investors, empowering each other with knowledge. And the learning centre at Ripehouse is www.ripehouse.com.au/learning. A few recent publications in 2015 that you can find in the learning centre there are listed here in front of us. Working through each one individually, they each sort of fit a different question and help us understand, a different concept within property investment. The Buyer's Guide to Property Investment, and this is probably the core theme that I'm going to start with tonight in understanding these remote markets as a local would, is understanding what information is important to understand as a local or a potential, obviously as an investor looking into those markets, what information is important. And then the Buyer's Guide to Property Investment is how to use that information and leverage that information in the conversation that you have with the selling agent for them to be able to, or to encourage them to be the negotiating person or partner with the vendor. So it's setting up and using information to your advantage in the conversation with the agent, so they do the negotiation on your behalf. That's the key. That's developing a daily process. If you can do that really efficiently, you're really good at communicating with the agent. You're going to be able to access, you're going to be able to negotiate effectively as potentially a professional property buyer's agent or professional investor would. They understand how to leverage investment information for their benefit. They're going to be able to negotiate property, and you potentially, understanding the power of information, negotiate property at fair market appraisal or even under fair market appraisal. If you can leverage negative information effectively and not be putting the agent off and getting their back up or a negative connotation with how you're positioning that information. So the Buyer's Guide there sort of goes into some information about how to do that, and that's what I'm also going to expand on this evening. The Know Your Purchase Strategy book there in the ebook in the middle takes a deeper dive into clarity of strategy. So what is your primary purchase strategy for the next property? I understand that might flip-flop, based on my experience. What is the primary strategy that you're implementing for this property that you're purchasing? Focusing on that, what does it mean at a state, region, suburb, street, and property level, making sure the story is consistent for that strategy all the way through. Keeping the eye on the ball. What is a primary objective from this property investment, and how is it going to take me towards my retirement? And making sure that story is crystal clear all the way through. That's what that ebook was all about. So I will be referring to that tonight. And the Q2 2015 Best of the Bunch region report takes a very broad look at all the data that we've got here at Ripehouse, the location and property data that we've got at Ripehouse. So that's a snapshot of all these suburb, region and state level data around sales volumes, days on market, values, rent values, vacancy rates, yield, all the key metrics. It's an analysis of those metrics to determine where each of these states and each region within are in their individual property cycles. So it's a really good help to focus in on a particular region across Australia, and then in that report we take a deeper dive and learn how to process suburbs effectively as well. So I will be referring to that tonight to construct our shortlist of suburbs states and regions. So I'll be referring back and forth to that as well. So just to let you know, obviously the start wasn't perfect tonight, so I'm just trying to regroup a little bit. There will be a question and answer session after I finish the content. So store your questions up. They are coming through to me. So I can see a few here around getting the event tonight started. So do anything that you do think that's relevant or something that you would like clarifying, I'll grab to them all at the end, and I can go into any more detail that you would like around any of these publications. So they're all freely available at the Learning Centre within Ripehouse. Just moving forward. Okay, so what do I mean by a local's mindset? I've sort of touched on this a little bit. It's really understanding what makes these remote, they potentially key locations, from varied sources, from varied property experts. You've come to me tonight on behalf of hotspotting.com.au and Terry Ryder. Terry and I have worked back and forth in various capacities with Ripehouse and Hotspotting for the last couple of years, and I really respect how Terry operates as far as the research that he performs on areas, the level of detail, and obviously the level of not just metric-based detail, but real-life, conversations he has with local governments and processing these remote areas to find the potential. You might have found it through Terry, you might have found it through other property experts online, you might have talked to friends. However you've come to a remote location and the potential for it, you have to still understand what makes these locations tick. What are the growth drivers? Why are people living there? What are the demand drivers? Why does this location have the upside? Understanding negative impacts in the suburb. So if you're a local in the suburb, you know not to buy down this street because of the public housing problem, because of the crime problem, because of the people who are commuting between the train station and the public housing complex and everything in between. It's these location-based drivers dependent on the facilities and elements within the suburb that you might potentially need to understand to gain that local's mindset. And then it's also how to leverage that mindset and understanding the positive and negative draws on demand in the suburb and putting a dollar figure against them. So it's one thing to know potentially the streets to avoid and the streets to seek out, but you need to know how much you need to pay extra above the suburb median to purchase in the positive elements, and potentially how much you'd expect to pay under the suburb median to purchase in the negatively affected elements. So that might be your strategy. You might be seeking out the high percentage of public housing in the street or in the suburb, and I have in the past in Dubbo. But you need to know what to pay for that area and not compare the comparables in that street or area to the suburb overall. You need to know how to assess fair market value for those properties based on the street itself. Okay, so that's what it's all about. It's also about, just addressing these points here. Investment sweet spots. Where are all the local dynamic? Where's the demand and growth aligning to create a sweet spot? The 2 or 3 streets that are absolutely driving the whole suburb forward. Leading demand, not the laggard areas. We want the places that are absolute sweet spots. So it's talking about understanding the mindset to really find those sweet spots and knowing, based on your strategy, there might be multiple sweet spots. Which sweet spot will be most relevant to my strategy? Okay, so flipping strategy might require one particular type of a mixture to create that sweet spot, and cash flow and capital growth potentially others. Okay, so that's what it's all about. That's what it involves to develop a local's mindset and why it is potentially important. Thank you for mentioning I might be talking a little bit fast there, Lena. I'll try and take a few deep breaths and slow down. I get a little bit excited about this content. Property's sort of what I've spent my life as well as my family around and involved in, so I do get right into it. This slide here, I think, is really interesting. It's touching on a local's mindset, but it's trying to sort of gain a little bit of awareness around how proximity and location within a suburb affects positively or negatively a willingness to pay. So not just by current prices or suburb prices or street level prices, but demand going forward. This graph here shows I'll send the slide pack through after the event tonight, but it shows expect to pay in some suburbs as an average in major cities over or approximately 25% more than the suburb average if that house is located in a street with 0% public housing. So once again, that's an average across all suburbs in all major cities in Australia, but it gets you thinking a little bit about public housing in a street, and potentially you would expect to pay more than 25% than the suburb average if there's no public housing in the street, and if there's over 18% public housing in the street. So we're talking about 1 in 5 dwellings as public housing or social housing. So it's quite high concentration, and there's not a huge amount of that sort of concentration across major cities in Australia. But if it was, expect to pay 20% less than the suburb average for properties in those streets. So yeah, it's just something to get you thinking. And obviously every suburb is different, but that's an average figure, and it really does trigger how you need to understand how location of the exact property in the exact street is potentially affected by what's around it. Another really nice key slide here to make that point is the proximity of a house to its closest shop, school, or transport. Now, we've conducted a lot of research in the last couple of years around sales prices. So our database comprises all for sale, for rent, and sold listings for the last 3 years. And we also know exactly the latitude and longitude of all those properties. And we know the latitude and longitude of key amenities, public housing and crime. So we've done a lot of research around mapping the proximity of those things to the individual property and seeing how that would affect the appraised value and also potential demand for the property. So these graphs here mention proximity to transport. Basically, right on the doorstep, 0 meters to transport is is a bit of a peak there. So I'm over in the top left-hand graph there. Basically, the red line is the suburb is the average expectation to pay, and we've got a real peak around the 1 kilometre from transport. So basically 1 kilometre from transport is a real sweet spot, or potentially on the doorstep is another sweet spot. Anything in between those two distances and you've got a bit of a drop off, it's still around the suburb average. However, after 1,200 metres is a real decline in willingness to pay and perceived value for property after that sort of distance. Schools, not right on the doorstep. Whatever the reason that may be, whether it's the school bell ringing or lots of school traffic in the school zone times. However, 250 metres is the absolute sweet spot for proximity to schools, and then after that 1,200 metre mark, again it drops off a cliff. Shopping, it bounces up and down, but definitely within 1,200 metres is a real sweet spot for proximity to shopping, and then after that 1,200 metres it drops off a cliff again. So we sort of can see a few patterns that 1,200 metres is around the sweet spot for walking. However, potentially not right on the doorstep of most of these things for how these amenities affect perceived and actual value. Just a quick note, you might see proximity to doctors, surgeries, parks, hospitals, cafes, precincts, any of these type things as real positives. According to our research, there isn't a huge correlation and driver between close proximity to those amenities. These really are the big three and perceived value, far and away the big three. And if you combine the sweet spots of all of these things into the perfect proximity, which is very difficult to achieve, once again, there's over 20% positive effect on value as an average for properties in our major cities. So definitely something to think of and be aware of. Proximity to amenities, public housing, crime, all of these things have a very large effect on demand and valuations for property. Okay, just moving forward. This is touching on now the summary from the Q2 2015 Best of the Bunch report. So it really was a high-level review of where each of the states are currently sitting. We're trying to assess where they are in the property cycle. Okay, so it needs to be said, I suppose, that 40% of the growth occurs in the actual recovery phase of the cycle. So we've got a recovery, we've got a growth period, we've got a slowdown, and we've got a trough period. 40% of the actual growth occurs generally in the recovery phase, with 35% of the growth in the growth phase. So, once we're really happy and very confident that a state has turned that corner through the trough and into the recovery phase, and it is definitely in that recovery phase, we've got a lot of upside there towards the peak of the market. Okay, so based on what we're looking at sales price growth, sales volumes, days on market, rent per week, rent volumes, to determine where the trends of those things, to determine where each state is in its current property cycle. New South Wales has obviously had a lot of growth, not just in Sydney, but also in regional New South Wales. Q1, according to our research, New South Wales regional centres actually outperform Sydney markets. So New South Wales regional really strong at the moment. Obviously, we've got a lot of growth, but New South Wales is, according to this visual here, actually already in the growth phase. So the scope to upside to the peak is less than states like Queensland and Tasmania. Queensland in particular, we've got a very consistent story based on those metrics and the trends of them for Queensland to be in the early stages of the recovery. So the most upside towards the market peak. Okay, so there's a lot in that report, and there's a lot of justification, and there's a lot of matching each of those states to your requirements. So definitely check that out. But I'll use Queensland tonight as the basis of our further investigation. Queensland shouldn't be treated equally. So we divided Queensland into 4 regions. Excuse me, we've got Southeast Queensland, Brisbane, we've got Central, and we've got Coastal. Each of those regions are also in different parts of their property cycles. And basically, we couldn't really separate Brisbane and Southeast Queensland as in the mid part, in the perfect part of the recovery phase. So very strong signals and consistent story around those regions being in the mid part of the recovery phase. So where regions or states are conflicting and different metrics are conflicting with each other, we note them as confused. So we can't really gauge where they are in the cycle reliably. Let's pick the best of the bunch. Let's focus on the absolute consistent stories for states and regions in the perfect part of the cycle. We can be fussy if we're learning the steps and the due diligence process to become local area experts on a mass scale. And that's what it's all about. So for the purposes of this, let's focus on Queensland and let's focus on the Brisbane region within Queensland. We could go in multiple directions. We could focus on yields or rent per week and potentially go to Tasmania with some great growth as well. We could go in a few different directions, but for the purposes of this evening, let's go down looking at and analysing Brisbane as an example. This is part of business as usual at Ripehouse. This research, quarterly research, is all part of the Learning Centre. So definitely join up there on the blog, and you'll be advised of when this becomes available. And as part of the Ripehouse community, there are some ways of accessing this information sooner and with priority. So just a bit of a note on that. The key takeaways. It's I talk to investors as part of my with Ripehouse and individuals, and it's it's a very consistent story around analysis paralysis. Really trying to, do I know this area well enough to invest here? How well do I know it? Am I just going to pull back and buy locally? How do I process all of this information and then leverage it in the conversations that I have with agents? How do I do this for multiple properties at once? And then be at different stages of the negotiation process with each. That's what it's all about. It's about increasing and improving your daily process, and that is a journey and that is a process, not spinning your wheels. Okay, it's about gaining a professional's mindset. Okay, so if you're looking at these very high potential areas, Brisbane is one where probably I can say 80% of the investors that I talk to through Ripehouse, whichever direction they've come into Ripehouse and they talk to me, are looking in the same sort of areas in Brisbane. They're drawn to it. So you're competing against a lot of investors. You're competing against professional investors, developers, and also buyers agents. So how do you develop a professional's mindset so you can compete on par or even ahead and process information and present it each day to the agents in a positive light to negotiate effectively? So that's what it's all about. Or buyers agents provide an amazing service. They do this every day. They potentially might charge close to 10 grand or 10,000 for each property purchase. That's a very viable option if you're time poor. Personally, my direction and background, I've chosen on investing in my own education and my own process and my own network, online resources, tools, whatever it may be, to develop and empower myself as a DIY property investor. Okay, so in doing that, there's definitely an importance on using the right tools, having those tools at your disposal each day to improve and make your daily process more efficient. So it's about understanding the local mindset and finding the real sweet spots in these suburbs, moving very quickly, being able to assess property value very quickly each day, and then avoiding the dead spots that are really not relevant to your strategy. So once we do that, I can take you through some techniques and some tools we can use to do that each day very effectively. Okay, so a quick investigation of the right tools. Yeah, for the purposes of this, as I mentioned, Queensland is in a real sweet spot. We've got a lot of investor interest there from investors that I talk to. The numbers that we've seen in the research we've done this year really point towards Queensland very strongly. Brisbane is a region, is a standout performer. I'll introduce you firstly to some research around price per kilometre. So I really like to see, if you understand areas of price depression, ugly duckling effects where more expensive suburbs next door potentially might pull up its cheaper neighbours. If you take that a step further and assume that proximity to the CBD is a driver of suburb value, so amenity into the CBD, let's plot per kilometre bands back from that CBD and see how price is related to that. That's an interesting piece of research. It's only one piece of research that I use to see areas to potentially target. I overlay that with individual suburb level growth indications, and this could be also obviously overlaid with suburb reports from Terry Ryder or suburb recommendations from investor friends or on the media or other investment experts. You're focusing on those suburbs by whatever means that you come to it. You can use the suburbs that the Ripehouse capital growth algorithm nominates, price per kilometre research, or whatever other means, and focusing on that. I'll look at a suburb that I can see with excellent potential right at the moment in Brisbane and process that with the Ripehouse software. And in doing that, I'm not just obviously showing you the software, I'm also talking through what it means to execute your strategy for different suburbs across Australia. So if you have a flipping strategy, how to find the streets that are absolutely perfectly matched to that strategy and then exploit them. So that's going to be gold. That's going to be that information you can take with you and apply. Okay, so this is going to be using the Ripehouse version 3 of the software, which was relaunched last November. We had a 30-day or a month-long beta testing period with over 100 investors involved in that. We move really quickly with the software. We listen and very closely with feedback and work with investors directly and integrate features at a tight schedule to improve the tool. And I'll show you a couple of those we've launched recently. I'm just going to switch over now to, forgive me, to the actual tools and give a quick demonstration, start illustrating how we can dissect a suburb and find the sweet spots for our strategy. So I'm just going to switch over now. Bear with me a moment here. Okay, so I've just shared you should be looking at the Ripehouse homepage screen here. I'm going to use this and launch into it. I'm going to assume everyone can see that okay, but I'll check back in a few moments. I understand a few of you are having issues with the screen resolution. I'm just going to try and adjust that now. No, I'm going to have to leave that there, I'm sorry. Okay, sorry about that, guys. I've just had a try at increasing the resolution of the screen, and sorry about that. Thanks, Adrian and Alana. I'll jump in now to taking you through to the actual software. I'm not an expert with webinar software, so that's immediately obvious. This is the main homepage here. I'm going to jump into the Learning Centre just to give you a quick demo of the price per kilometre research. So I'm going to use Brisbane here. We are moving towards Brisbane as an area that has a lot of interest, a lot of focus on. The numbers are really stacking up from what we do here at Ripehouse. So as much as I can recommend a major city at the moment, it would be down to Brisbane. What I'm looking for here, so this map, just to process it a little bit, each circle is a kilometre from the CBD central point here. The darker the red colour, the higher the average for properties sold in that block, in that kilometre circle area. And the further we go into the green, the cheaper. Okay, so in the suburb hotspot report, Best of the Bunch report, you can actually see these multiple price depression areas to target. There's a very visible price depression area here in the northern quadrant of Brisbane at the moment. So we're starting out here at the the 8 kilometre band at 545k average price. We jump out to say the 10 kilometre band or the 11 kilometre band, we go down to 505, so a drop there, and then back out here at the 16 kilometre band, prices come out again to 570. So a lot of that might be down to geographic elements and averaging around sort of larger block sizes. But on the assumption and based on the individual suburbs within these blocks I have investigated further, there is a very visible price drop off here around the 8 and 9 kilometre mark from in the northern quadrant of the Brisbane area, which does move back up to higher prices the further out. So that's an area I'd really like to investigate and basically flag that according to this research. And as I say, that flag is there. There may be other drawing factors towards this region, and combined together, they form a buy signal. But this is a really nice, compelling piece of research. So Nundar, Wavell Heights, Stafford Heights, these are all key suburb names that I'm going to be looking for when I start the search process within Ripehouse. So based on the data that we have, we can sort of conduct a basic capital growth assessment for each suburb in Australia. And this is a rolling number, so it's quite dynamic and very up to date. It's looking at key buying indicators in a suburb. So we're not looking at potentially what is causing those buy indicators like new infrastructure or new key demand drivers in the suburb. It's looking at, once that demand is there, when is that demand starting to translate to capital growth buy signals? So it's not looking at past trends, it's not looking at past growth as an indicator of future growth, it's looking at the market right now, demand and supply, for key buy signals that is going to signify short to medium term growth. Okay, so the key elements that we look for: days on market as stable as a baseline, sales volume increasing over the previous 3 months. So a strong 3-monthly trend upwards of sales volume on the back of rental per week increases and also stable rental volume. So it's a combination of those 4 things we've determined as a very high correlation when they're trending in the right direction to short-term capital growth. Okay, so Nundar, you do see suburbs consistently ranking highly on this metric. I've recently and been purchasing Dubbo for a couple of years, and Dubbo has been high up on that metric, in and out, consistent buy signals for that whole period, and monthly, quarterly on quarterly growth, basically maintained all the way through, and still scoring very highly for current on the demand buy signal. So that's what goes into us ranking each suburb in Australia based on those metrics and comparing each one like for like and putting them in order. So this is going to basically pull back suburbs in that order, and then we can set a filter on that based on our buying requirements. So I'll do that in a moment. You can also nominate and bring back to you the highest ranked flipping suburbs based on your criteria. Flipping looks at high percentage of owner occupiers, high percentage of houses, and a large price spread between unrenovated and renovated. So we've assessed all suburbs on those metrics and bring them back to you in ordered list. And we've also got cash flow. So obviously cash flow starts with yields. We rank suburbs based on yield, but we take suburbs out of that mix if they don't satisfy a minimum level of consistency and reliability in the rental market. So we need to have, reliable vacancy rates, reliable rental volumes, and no spikes in any of those to qualify. So we're starting with the highest yielding areas, which might be very volatile rental mining markets, and scratching them off the list if they don't satisfy those requirements. So these are all tools to use in searching for suburbs very quickly. let's say now we're looking for suburbs with the highest capital growth potential. We can set a minimum crime level that we're willing to accept. We can set a minimum and maximum price range. I'm going to select Queensland and then the Brisbane region for our focus. We can limit this to local government areas, and we can set a distance to CBD requirement as well. So I'm going to click on Find Suburbs. It's going to go away and apply those filters. Remember those suburbs that I mentioned before. So we've got Stafford Heights, Chermside, Wavell Heights, Nundah that we're really looking at. These are basically in order of their capital growth potential, and that's a percentage score, which we can see here. However, I like to use this as a shortlist. So each of these suburbs has its unique characteristics and potential. Some are higher yield, some are less days on market, some are higher or lower suburb medians. Some might be prioritised, and the current demand is 2-bedroom units or 2-bedroom houses. So whatever your sort of requirements are, you can filter further, or you can use this as a shortlist and process each of these suburbs one at a time. Based on our process tonight in this webinar, we can only sort of go in one direction. We've looked at price per kilometre research as our key piece of research, I suppose, and these other obviously complementary pieces of information. But Nundah was one that we actually found and nominated as part of that. So I'm going to use that as the basis of our analysis tonight. We've got some really key quick look information here. Public housing percent, a lot of multiple elements here. I like to look at the number of dwellings in the suburb to make sure that sample size is reliable. Distance to CBD, it's all noted. So I'm now going to click on the Analyze Nundah button here. This is going to take me through to the main suburb map analysis page at Ripehouse. This is where the magic happens. This is a lot of detail, a lot of analysis that you can perform on every suburb across Australia. This is the insight into why locals live here, and how you can use that to your advantage as an investor. Okay, so the first thing that we can look at when the suburb loads is this blurb mentioned here. Things are a little bit slow in loading because I'm obviously hosting a webinar as well, so you need to be a little bit patient sometimes. There's a lot going on this page, and sometimes it takes a few seconds to load. Basically, this is going to start off by telling us that there's 94 properties that are currently on the market that we can determine location, and they're consistent and individual properties, not 20 units advertised in the same off-the-plan development. Most in-demand number of bedrooms are 2. Units are most common. The comparatively high number of renters and very low crime rate compared to the state. Be aware, Nundah has an above average concentration of public housing. Okay, so that's a really quick introduction to what we're looking at here in Nundah. Just remember that we're coming into Nundah with capital growth as our primary strategy. So we might be looking at, say, a secondary strategy of cash flow of 5% per 5% yield, or 6% might be our minimum requirement. I would classify that as a secondary strategy. We want to see why Nundah is recommended for its capital gains score, and this suburb ranks higher than 87% of other suburbs in Queensland at the moment. So we can click on detailed strategy analysis. That'll tell us the reasons around why. It also ranks very highly in the 78th percentile for cash flow. Sales volumes are increased 5% in the previous quarter. Rent per week has increased 7%. Days on market has decreased 7% in the previous quarter. So, all heading in the right direction. Stable for sale volumes. Reasonable differential between unrenovated and renovated property. So I'll show you how that's worked out in a moment, but that's sort of telling you the potential to move an unrenovated property through a renovation and sell on the upside as renovated. So that's telling you the price spread. 2-bedroom, the most common property type, yield and rental data is all there for us to process. So that's sort of giving us a bit of a snapshot around why the suburb might be recommended in the first place. But obviously the key thing that we need to look at when we're processing these remote suburbs is price dynamics. So let's get really intimate with this down here in the bottom left-hand corner, and that is quartile pricing. Based on what we see, generally we can relate unrenovated property to the lower quartile in price, and renovated to the upper quartile. And so that's basically our price spread. So this current price spread relates to the 94 properties that are currently on the market, and that is the lower suburb median and upper quartile pricing. What we do now, we use that as a baseline, and we start filtering properties based on their type, and we see, and also location, and see how that price spread changes. Okay, so that's something to keep in mind. We can do, basic level sorting of current properties on the market. So they're currently sorted based on price. We can sort them by discount amount. So in the current sales campaign, have they been discounted? So the top one on the list here has been discounted 11%. I'll show you how we can see the full listing history for that property in a moment. And we can also filter by days on market. Okay, but I won't jump into the properties at the moment. What I'm trying to do, each of those red icons on the map is obviously a property. I want to see where they're located. I want to dissect the suburb as a local would and find areas of most potential for our capital growth strategy. Okay. To start with, we know that 2-bedroom units are most common. Firstly, I just want to see where public housing is and if it's an issue in the suburb. Okay, so this toggle I've turned on here tells me that there's 5% public housing in Nundar. The darker the red shading, the higher percentage of public housing. So this very dark section here has the highest percentage of public housing in Nundar. Each of these areas that are highlighted on the map relate to approximately 200 dwellings. And so they're bordering streets, and they each contain 200 dwellings. And we can click on any of these overlays to determine and see exactly what is located within. So in this particular overlay, we've got 21.6% public housing. We've got 64% renters, 68% units, 4% yield. We can see this average sale price for that area only, and we can see the average rent and income for that area only. So very specific information for us to get a real understanding about price, yield, investor dynamics within small individual areas in every suburb across Australia. So that's to start with, getting us the information we need to start processing things as a local would. So a local might know, yes, that's an area of public housing. I wouldn't recommend living there. If you went and had a coffee there, you'd see that the street demand and potential street appeal is lower in that area. People have inconsistent tenancies. People have problems maintaining quality of the property, etc., etc. People understand that, and people who are potentially moving there to tenant from you would understand that, and they might avoid the area. So if you were to invest in that area, you potentially might have ongoing problems, and gaps within tenancies, ongoing maintenance issues. Okay, so that's number one assumption for us. At a street level, we have some requirements that we need to satisfy for that street to be recommended for capital growth. And low public housing, lower than average in the bottom quartile of public housing in the suburb is one. Okay, so we want to see and invest in areas that are going to be reliable for us to secure a tenancy longer term and to have reliable yields. Therefore, we're going to be able to hold that tenancy and achieve capital growth. So it's all coming back to, having that yield and being able to achieve capital growth by holding the property. And the first thing we look for is areas of high public housing. Okay, you might have a completely separate strategy, and you might actually seek out the areas of high public housing and know that they actually sell for half the suburb average price and exploit that and pay and have excellent yields, but you're wearing the unreliable tenancies. You can use that to your advantage, and you can filter properties that are located in that public housing area, and you can see the price spread for those properties and assess market value for them. So there's lots of ways of using this tool. If you're looking for a flipping strategy, you'd have a different way of using this page. It's all about learning and being supported in doing that. So that's public housing. Let's have a look at occupancy type. So the areas in yellow are predominantly rented, and the areas in green are predominantly owner-occupied. So if you're adopting a flipping strategy, so a short-term hold, renovate to sell for profit, you're going to have a lot of upside in selling to other owner-occupiers. So they're going to fall in love with the renovation. They might pay a premium. So it's really smart to seek out areas with high public housing, with high levels of owner-occupiers, because you want to sell to an owner-occupier. You want the area to be attractive to owner-occupiers. So the green areas there would be very relevant to a flipping strategy. The yellow areas are relevant to a capital growth strategy because we want to have very strong rental demand. One of the reasons why we came to the suburb in the first place is because rents have been increasing recently. Nice, strong rental increases are very closely related to price increases. Let's invest in the areas where renters are demanding to live right now, which are the areas in yellow. So we can really quickly see that with the tools if you accept that assumption too. Okay, so let's now move on to property type. Anything in the yellow is above suburb average, so above 57% of units, and anything in the green is above average percentage of houses. So what this is telling us very quickly, very strong correlation between renters and units and owner-occupiers and houses. So if you're looking in this suburb as a flipping strategy, you'd be looking in the green areas and buying a house. And if you're looking at a capital growth strategy, you'll be looking at the yellow areas and buying a unit, to get that tenancy demand. So No, that's a really nice example of this with a direct correlation, and sometimes you have the inverse effect. So it's about seeing those two things together and working out what particular property class is going to be most in demand by tenants to have reliable tenancies going forward. And every suburb is different, so it's a process of doing this individually. Another one, the next one I'm going to look at is rent per week. As I mentioned before, I really like to invest in the areas of higher rent in the suburb where rents have increased recently. So what we can do, we can actually see the areas here in purple that have higher than average rent per week, and we can seek those out. Now, they might be because they're home to the largest houses or the highest class of property in the suburb and therefore attract a higher rent, or it might be because there's lots of renters there and they're actually creating that demand and pushing prices up. So there's two classes of explanations for high areas of rent. If we're finding purple areas here with high rent and also areas with strong levels of tenants, we'll assume it's a commoditized type of property that's been demanded by tenants at the moment, and we'll seek those out. So what we're sort of looking for, well, this is the third assumption, 2 areas of yellow so far, and now this third area of purple, which is in the high areas of rent. So you don't need to write all these down, and you don't need to potentially go through this whole process every suburb, because this is very in-depth, and I am taking the time to show you all what's possible. There is a cheat sheet that I'm going to show you in a moment that makes all this very simple. Okay, so this is rent per week. Areas of purple are higher than average rent. Areas of purple now are higher than average income. So I like to see a correlation between the two. I like to see high incomes supporting higher rents. So higher incomes would mean they've got higher disposable income to support the rent and therefore more stable tenancies. So very strong correlation anyway in this suburb between high rents and high incomes, but I'd just like to check that. Okay, this is a really important one. Where are the high yielding areas in the suburb? Anything in the yellow is actually higher than average yield, and anything in the green is lower than average yield. Sometimes we see sort of outliers like this area here in the green, which actually has very, obviously no tenants, might have very few dwellings because it's a large geographic area, and we just have to sort of fill the area up. Potentially there might be only a few houses in that, and that might be the remainder in the suburb, and that has no renters that we've been able to deem. And therefore, it's obviously shaded like this as an outlier. But let's have a look in anywhere in the yellow. This area over here actually has the highest yield in the suburb of 7%. That may be because of low sample size issues, once again, because of the smaller number of renters, 1 in 5. And it also might be because of the property that's actually in those streets are causing that. But this is a key point, because if we've come to the suburb, it's telling us that in the last 3 months we've had a suburb yield of 4.4%. So all the key metrics are they're very related to what's happening today. I don't really mind or care what's happened a year ago. I want to see what the yield figure is doing on a daily rolling figure in the previous 3 months. I want to act on current information. We've got 4.4% current suburb yield. We might have a 5% minimum requirement as our secondary strategy. Let's find areas and streets that have an average of 5% yield. So any of these in the yellow here are basically right on that 5%. Any of these in the green over here, 4% yield here, 3.9%. So not all streets, are born equal. Just because the average suburb yield is lower than our sort of minimum requirement doesn't mean we have to write it off. We can find the highest yielding streets in a suburb and we can target those and make it work. And that's what we can do here in Nundar. There's a lot of other toggles we can go into, but what I sort of wanted to show is the cheat sheet. Okay, so combining all of those things based on the assumptions, we can click on the strategy overlay here, and that will tell us there's one area that's recommended as a capital growth zone. There's multiple areas. There's 6 areas that are nominated as flipping zones in the green, which we can target if that was our strategy. And there's 3 areas that were recommended for cash flow zones, and now in the yellow. This one here in the middle is actually a cash flow zone as well. What goes into those nominations, that cheat sheet, we can click on the filter properties button down here and view that. So as I sort of mentioned, to qualify for a street for capital growth, we want to see low public housing, high rents, high incomes, and a high proportion of renters, to make sure that's the street and area that's going to have nice, consistent tenancy demand and is potentially leading the suburb forward as far as rental growth. For flipping at a street level, we want to see high proportion of owner-occupiers and high proportion of houses. And for cash flow at a street level, we'd like to see high yields, high rent, high income, and high proportion of renters. Okay, so I suppose the key point, and there's a lot of information here, there's lots of case studies and FAQs that we can go through to clarify things, and I'm always on hand for support and helping and processing this and one-on-one guiding people through the software via Skype. And I promise my Skype skills are a lot better than my webcast skills. But what it's sort of doing is trying to illustrate the point between you come to a suburb with a particular strategy in mind, how do we make sure we're investing in the street or area that is really going to have the most upside for that strategy and not potentially in the dead spots. That's the locals' knowledge. That's what they understand. They might know to avoid public housing in this particular spot. This is our cheat sheet. This is how we can focus right down onto the key properties in these areas. Okay, so I'm going to do two things just really quickly. I'm going to click on, I only want to see 2-bedroom units, which were the most in-demand property type in the suburb. And I'm going to apply that filter. That's only going to show us now 29 2-bedroom units, and now I want to see how the price spread changes. So now our new price spread is 317 as the lower quartile and 417 as the upper quartile. Okay, so that's now how we are assessing value. It's not to do with houses. I've got a few questions that have been coming in as I've been into that screen there. So yeah, I'll get to those in a moment, but I'll keep going on with this. That's our new price spread. That is how we're starting to assess value now for 2-bedroom units in the suburb. In answer to one of your questions, this data, so our Ripehouse search engine is consistently going around suburb by suburb and finding current on-market properties. And that's as a search engine would, as Google would, finding those properties and also tracking on-market history. So this is from the key real estate portals, tracking not just the original listing date of that property, but also when it's been discounted by the agent. So we can track all the discounting history and we can potentially use that to our advantage. The darker the red icon, the higher the price of that property, and the wider icons there are actually price withheld or auctions. Okay, so now we'll filter that down to 29 properties. If we click the strategy tab on, we can be very strict now, and we can say, right, I only want to see 2-bedroom units that are located in that blue area that we are focusing on. We can click that filter on and we can apply it. That's going to go away. It sometimes takes a few seconds to apply that filter. It's looking at each individual property and where it's located. But when that comes back, it's actually going to obviously only give us 3 properties now that are for sale. Okay, so that was very simplistic. We can draw areas on the map and remove properties that are located within those. We can set maximum constraints of levels of public housing that we're willing to accept or levels of rental density that we're willing to accept, price range, and we can combine, I might want to see properties that are located in cash flow and capital growth zones. You can also then say, right, I don't want to just limit myself directly to those capital growth zones. I want to have a few suburb. I want to have a few properties in the adjoining area. You can use a variety of filters and area polygons to remove properties from the map. And you can also then save this suburb to your shortlist, and you can save that filter so it's applied automatically. So once you've processed this suburb, you do that almost once off, you become a local expert, and then you want to only show the properties coming in and out of the market or discounted every day very quickly, and applying that filter automatically to only show you the 3 properties in the suburb that match your criteria. So once again, I'm just drawing your attention back to the very tight price spread there of these properties. So they're all basically priced at the same amount. Let's, as they're ordered by discount amount, let's look at this one here on the top that's been discounted at 11%. Just so you know, we can show on the map all recent for rent properties and also sold properties, and you can click on each of these icons to view the details of that sold property. So that's previous years sold properties there displayed on the map, and you can view all those details one-on-one, and you can view all the current rentals on the market as well to view those and gauge a bit of a comparable analysis. But for this example, let's pick this one here on the top as 11%, and we'll go and have a look at that. So firstly, what I'm doing with this property as a local, as an out of market person, we want to gauge it and assess things as a professional would. So I'm just looking at the key variables at this level of due diligence to assess the condition of the property. I'm not going to get very in depth. You don't need to. We basically want to assess, is the condition poor, average, or good? Okay, that's going to relate roughly to our quartile pricing. The first thing I look at is street appeal. High street appeals, obviously it's a new unit. basically, I'll probably say this is within 2 or 3 years old. Very good condition. Potentially, not nice floor coverings in the lounge, to have white appeal in the bedrooms, and a cream colour is not overly white appeal either. That's very white appeal is basically white and very sort of I've forgotten the word, neutral floor coverings and wall coverings, but there's no way you could say that this is not in good condition. So let's just remember that based on the images, I've assessed the condition as good. Okay, I'm going to nominate that here as in good condition. You can assess it as poor, average, and good. We do have an algorithm that looks at the descriptive text used by the agent and similar properties in the suburb, and it will automatically try and gauge that condition of the property. So in this case, it's actually selected the condition as poor. The agent might have said that it's, mostly I would see unrenovated or renovated to light, or original condition, or all these words. Based on the type of properties in the suburb, it will actually change that scale, and it might assess a property in this location, in this suburb, unless it says off the plan, brand new pool, it would actually assess it as in a sliding scale as a lower condition. So we can definitely override that now. What that's going to do is it's going to set the baseline for comparable analysis. So if we assess this as condition good, as an average, it's going to return other comparable properties in a similar condition. So it's going to make our job a lot easier in finding relevant comparables. With Ripehouse, we can see the full listing history. So it originally went on the market on the 11th of February. It's now been reduced 11% down to $395. This is our gateway into the actual listing. As a search engine, it finds them and displays them there. We don't own that data as further than it is in the public domain via the Ripehouse search engine. If you want to contact the agent and progress with that, you click on that link and go through to it there. It's basically showing the full listing history, and this is the information that we need to start constructing to leverage in the conversation that we have with the agent. Okay, so discounting history, why has it been discounted? Why has it been on the market for so long? Why have they discounted it twice? What was the justification for the $40,000 discount recently? What is their lowest price point? Where are they going to go on from here? You're going to have to construct and use that information in the conversation with the agent. Okay, so this tab here is another little bit of a snapshot of the suburb and the area, the strategy. All stuff that we've seen before, but all very key information around checks and balances just before we're about to start the comparable stage. So seeing where public housing is, seeing the yield, seeing the rent, seeing the incomes, all of the information around the area, the strategy in the suburb is just here for us to tick. This property suits everything very well. I like to see alignment between the property, which is most in demand. We don't want to be left with a white elephant. We want the property that people are demanding in that street. This particular area, street area, is very relevant and recommended for a capital growth strategy and also a cash flow strategy. So that's according to the toggles that we've seen before. And we know that the suburb is most recommended for a capital gain strategy. So they're all in the line, very well in sync. So now we can go through the comparable stage. Ripehouse puts some power, it does things automatically, and it shortlists property in order based on our sorting algorithm. It looks at recency of sale, it looks at condition of property, it looks at number of bedrooms, obviously same property type, and it also looks at distance away that property is from the property in question. It's just having a bit of a think about things at the moment because the connection's been shared, obviously, but it's giving us the top 6 comparables. It does assess conditions, so what we can do is we can click on and view those images for those comparables, and we can agree and disagree. Is it a valid comparable or not? What we're trying to do is we're trying to get this price spread of the top 6 comparables as tight as possible. Say we look at these images, we disagree that this is not a valid comparable, we can remove that comparable and it will be replaced with the 7th down here. So I won't go in. It's a process now of looking at street appeal, looking at neutrality and presentation of fixtures and fittings. It's about looking at the recent how modern the kitchen bathroom is, scope to change floor plan or value add. They're all the questions that I can help you with, and the community can help you with in assessing condition of property and assessing if the comparable is relevant or not. But basically, if you're going to get the top 6 that's recommended by the engine, it's going to be very close, but you do have absolute control to massage and curate that list to be really comfortable with it, because you need to have that control. It's not just printing print and having a comparables report and just seeing that as the gospel to move forward on. if you have control and you own this process, you get better with time, and it's not an arduous process, I suppose, to start with, but you really intimately understand how values are assessed in the suburb. With all the knowledge that you have around location, this is absolute gold in becoming the local area expert and being able to assess very quickly what average or fair market value for a property is, and how you can use the information that we've found, public housing, listing history, occupancy type, yields, how we can leverage all that information to potentially buy under this fair market value, and that's the key. Okay, so that's all gathered, and the for rent and sold comparables are gathered together, and an appraisal is formed. That establishes a baseline based on those comparables of 370. What it's telling us now is, based on the location of this property, we're going to adjust the appraised value of it. So because it's a little bit far away from schools, if you can remember that graph that I saw before, it's potentially a negative 8% negative impact on the appraised value of that property, just because it's a little bit far away. Quite good adjustments for shopping and schools, no public housing adjustment, as we saw. We're not in an area of high public housing. That's basically in building the proximity of that property and helping you to assess how it should be adjusted. You might know that you're not going to be tenanting to people with children in this suburb. They're all young professionals. They're not going to care about the school adjustment. So that's something that's there as a guide. You talk to the agent and you say, who's this been tenanted to for the last 5 years? If it's all young professionals without children, if it's a one-bedroom unit, for example, just ignore the schools adjustment. It's there for a red flag or a green flag, just as a starting point. But what it's trying to get you to think about is location and how that is potentially affected. All that can be pressed and printed off into a report, taken to an open home, used as a guide, used to talk to the agent as a point of reference. That is an individual property report, and that's the process of forming the appraised condition, looking at the price spread, looking at the comparables, and appraising that property based on fair market value. So we can do that for every property that's currently on the market. We can also add properties that are not on the market that might be already in your portfolio, and we can actually perform that same analysis on those properties. There's so much information on this page, and I won't go through all the different features tonight. You can perform neighbourhood comparisons between this suburb and the 10 closest neighbours around all the key KPIs. How does it sit? Is it an ugly duckling, etc.? It's a very comprehensive suburb report, which we can click on here, that has a lot of information around the suburb. So this full blurb that we started with, crime information, distance to CBD, all that information is there. We can see value distribution for different types of housing. We can see exactly when the high and low areas of public housing are. So it's broken down into a different format on these tabs. We can see all the key investment metrics for this suburb. So we work as far as latest quarter and last year, and we do a comparison between the two to get the recent trend. We can see average for sale price, average for rent sold, days on market, for sale for rent and sold volumes, which are very important. Vacancy rates and yields. We can read a lot of things into this. If the average for sale price, we can see the discounting amount here very quickly of just over 10% by the looks of it. But there seems to be a lot of more expensive stock now on the market compared to last year. We can deduce a lot of things by looking and reading into these numbers. So there's a lot of also information there. But if you can sort of wind your mind back to that table of suburbs that were returned based on their capital growth potential, obviously the higher quartile the higher quartile comparative score for those suburbs were rated in 88th percentile or higher. We can actually zoom the map out, and we can realign it to a viewport, and we can click on these toggles here in the right-hand corner, and that's going to display to us areas shaded in blue in the very highly rated. For the darker the blue, the better the capital growth score is. This is very important for seeing clusters, okay? So we have a cluster at the moment of blue that's actually following through Nundar in that area of price depression that I mentioned, and it follows the train line down through here, through Wooloowin, into Clayfield, right into Albion. So that's actually the train line. So there's a cluster of high capital growth potential at the moment that's following that train line. And there's lots of other clusters in Brisbane. There's one over here in Kelvin Grove and Red Hill, so that's another area of potential. Over here in Wynnum West, another area. Down in the south, there's multiple areas as well. This is a real nice check and balance to see a cluster of high capital growth potential together. That might be the similar reason, the similar story, and it's nice to have that reinforcement of its neighbours. We can also see areas of flipping potential as well. It's great to see them on the map. Areas in green are the highest regarded for flipping. It's interesting to see that these areas of obviously in the green here, are all clustered together, would have high percentage of owner occupiers and high percentage of houses. They're all clustered together. And we can also see areas of cash flow, so the highest regarded areas of cash flow recommendation as well. So, as I said, there's a lot of data and knowledge to be gleaned from this page, and you can spend half an hour here becoming a local expert and really getting down into the details. You can save these suburbs as your shortlist. You can come back to them daily and view the key KPIs for them. I'm just going to switch screens now back to the slides, but I hope you sort of found that interesting around some of the information that that we can grab. Sorry, I'm just playing back and forth, and use to our advantage. Yeah, I guess, you know, individual property professionals, buyers agents, etc., local experts, you know, if we've lived in the suburb for 20 years, this is all information you potentially know and take for granted. What the Ripehouse community does is build up around the research and learning that we do and perform. It's about helping and nurturing each other in the community to have a locals mindset, but at a mass scale. So it's supporting each other to do that. Okay, so how we do that is not just with the research and the tools, but it's performing and forming property partner groups with groups of 5 individual investors, bringing them together that have similar goals, similar areas of interests, and moderate them with an investor expert, which is with someone here, one of our staff at Ripehouse. And that weekly conversations and a private group where we can discuss suburbs that we're looking at, we can process and dissect them together. We can become local experts together or in separate areas. I find these groups are really good for, I'll just move to the next slide, excuse me. Basically making each person accountable to their own goals. Okay, so as part of the weekly process, it's taking in turns to set about what we're trying to achieve at a macro and a micro scale. In the next week, making sure we achieve to that, make sure we're holding each other accountable. It might sound like an arduous process, but it's very effective in making sure we all keep our eye on the ball. We can digest new learnings, and we can help each other with our own background and experience and what we're seeing in the market, so we can share that knowledge. We can support and advise each other in these private group conversations, and we can encourage each other to think bigger and dream, to motivate and empower each other. So I see this is like the missing piece. You know, you've got the learning, you've got the research, and that's obviously coming from a lot of different sources. You've got the tools and being the local experts and using these tools to increase your how you cycle each day, your daily process, and making that really efficient and opening your catchment area up to the highest potential in Australia, and being able to dissect that on a daily basis with the support of the property partner group. So it's a key ingredient, and it's part of our Ripehouse community. On that, the Ripehouse community help and support. So and you know, helping and using the software about those and sharing that information. It's about launching the research early and seeing that. It's about using the tools and using them for the due diligence process and competing in these fast-moving markets with buyers, agents, and professional investors. It's about avoiding spinning the wheels, you know, avoiding analysis paralysis and acting with confidence and information and being able to leverage that. So being able to use the property partner groups to talk strategy, to talk how to leverage that information and what we know, this particular property, how can we negotiate with the agent? How can we have a conversation with the agent so they don't negotiate with the vendor? You know, if the vendor feels like this is the sort of, that's what they're accepting, and the agent is going, yes, this is what we should accept, and they're on your side without knowing it, that's what we want to get to. So it's about how to use this information to get the conversation to that point. Okay, so they're the 3 core elements, and I really think they are critical. Okay, so some of the recent, there's been a lot of feedback that we do receive. Some of the great feedback that I've received recently around the Ripehouse community is from Andrew over here on the left. So he seeked out a property in Cairns based on his primary strategy of cash flow. Found this property based on fair market value. We got it for, Andrew got it for 28,000 less than fair market value based on negotiation. Donna and Cassandra think, you know, they've got their comments there about the research and how we sort of push that forward and promote that. So that's directly taken from our YouTube content from the Learning Centre. Tina over here on the right actually bought in Chermside towards the start of the year, based on looking at enacting a flipping strategy, using the tools to find that and negotiate and secure that property with a flipping strategy. And she's currently undergoing renovation, so we'll have updates on that and check in with it. That's just a bit of a snapshot about the process and how we can help the community. So I'm not sure you've come in, and this is, I've really tried to give as much information and really strong content this evening around everything I know. You know, I try not to leave anything on the table, because it's all about helping each other and it's all about learning. This is all a process of moving forward, and I do think it's, you know, three distinct elements. It's learning and discovering, it's empowering each other with the tools and the knowledge we need to implement that daily, and it's about nurturing each other to process and to perform daily. That's all part of the Ripehouse community, which is an annual subscription of $797. As a thank you for taking the time out tonight and joining me, I'd love to offer you a discount tonight as part of coming in through the emails that you've received from Terry and through hotspotting and the work the partnering we have with Terry. So there's a $200 discount that's enabled on that as a thank you. But that's, as mentioned here, available for the next hour. So it's, as a group, to start forming these property partner groups as soon as possible, moving forward together at the same time, processing things together, and that's why I'm making that discount tonight available for the next hour only. Also for the next hour, I'm opening up my time as part of one-on-one do-it-yourself investment coaching. So that's all included in that price. Basically, it means if you subscribe to the next hour, I'm making my time available with you one-on-one. So we start off with a Skype session, and this is something I've done time to time with current members. Set up a Skype session. Let's look at your strategy. Let's look at the areas and the research that we can find and pinpoint suburbs to look at. Let's become local experts for those suburbs together. And obviously, I've got the advantage of knowing and talking to lots of investors, so I can see what lots of people might be doing, and we can focus on the areas that people are having a lot of success in at the moment. So it's about becoming those local experts for those suburbs together. You can see that process. You can potentially then re-implement that over and over down the track. But it's about doing that together to start with, and making sure we get to a short list of properties in that session where we can go away, look at the information that we now know, and leverage the conversation with the selling agent effectively for those properties. I'm on hand, back and forth, emails, phone, whatever it takes in that conversation with those agents. They all come to a dead end. Let's go back on Skype. Let's start again. If we sort of go down the track, I'm there to support. And what it's trying to do, it's one-on-one coaching until you secure the first property with Ripehouse according to your strategy, ticking all the boxes, and getting you to a point where you can then repeat that process over and over again as part of the community. And that's obviously on top of the property partner group, so that can sort of take away and support those sessions as well. So as another added bonus, and coming from hotspotting.com tonight, I've worked with Terry to be able to offer you free hotspot report from hotspotting.com.au. These are the location-based reports, so the top 5 reports in regional New South Wales, the top 5 city suburbs in Victoria. These are the regional-based reports, and you can let me know which report you'd like to grab out of that whole stable of reports. Amazing content. I really love what Terry does with the level of research that he goes into with each of his reports. Absolute, you know, that can be the guide, and we can use that as a baseline to start our conversation in the one-on-ones. That's available for the next hour only as part of the $200 discount, the one-on-one coaching and the free report, which is retailed on Terry's site for $77. So that's all available for the next hour only. There's an offer I'm just putting on here on the right-hand side before we launch into questions, which is actually going to enable you to launch and jump into that offer right now. It's going to be available from this point for the next hour. You can click on that over to the side there. A couple of notes about the subscription with Ripehouse is we have a 30-day money-back guarantee, no questions asked. If in any way you're not satisfied or you feel that this is not for you in the first month, you know, after the one-on-one coaching, whatever it is, no questions asked, full refund, and you get to keep the suburb hotspot report there. So there's really no, you know, that's just there regardless, and you get to keep that even if it's not for you. and we'll do everything, obviously, to make sure you get the most out of the tools as part of the one-on-one coaching, but that's always there as a guarantee, because I love to have a vibrant community where everyone is really getting a lot of value together, and that's what it's all about. Payment processing with this offer is secured by PayPal, so they process the payment, they manage your subscription, they manage the refund and guarantee, and that's all administrated via PayPal. This is all part of the live support and 24/7 access to the tools, billed annually. Once you join and subscribe through PayPal there, you'll be redirected back to the site, so look out for the welcome pack via email. It might go through to your spam folder, but that's going to have all your account details and get you using into the tool straight away. We're on hand with live support to support you in doing that, but then also I'll be in touch personally to organise a one-on-one with you when convenient and when you're ready to go. Okay, so I'll jump in, and I hope you really have found things informative for tonight. I do apologise about the problems that we had earlier on with the technical problems. I'll go through. I've obviously got quite a few questions lined up here. Feel free to jump in at any time with now questions as I'm going through them about the software, about the research, anything to do with subscriptions or how to purchase or whatever it is. So jump in. I'll probably spend another 15-20 minutes going through these one at a time. If I don't get to you, I can see 4 questions here already. Then I'll pop all the answers back to everyone via email. So I'll be opening up the slides tonight and also a recording from tonight, and I'll be sending it out to you personally tomorrow, and also with the questions that I didn't get to. But are all these probably also listed on realestate.com, and how up to date is it? Good question, Guy, because as a search engine, we do filter through the main portals and we grab them. So properties that are not on the market outwardly, they might be private listings, etc., we won't capture. Sometimes agents don't disclose the address of a property. You know, they might be smart or whatever they're trying to do. You know, all they're doing is sort of not creating as much demand as potentially possible for that property. We can't capture that. We need to know exactly where that's located to give you the ability to assess value for it. So they're doing themselves a disservice, so they will slip through the net as well. But generally, we see 97% of properties on the market will be listed within Ripehouse based on how we scale things. So yes, they are on the major portals, and we go end-to-end, suburb to suburb, with an average of 24-hour delay. Generally, it's basically less than that, but I can say with certainty 24 hours is the average delay, and that's picking up new listings, revised or discount to current listings, or suburbs that are properties that have been sold and transitioned to sold listings. Touching on that, so based on a lot of the different information that we have, the next question from John is pretty similar. Is it possible to use historical data to determine a suburb is becoming gentrified? Actually, it was one of the toggles, John, that I didn't show you, and I probably did, and this was one of the original features of Ripehouse, is investment hotspot overlays. We use crime hotspotting algorithms that show peaks and troughs in data, so it's used to see high incidences of murders and things in the US. We actually worked with researchers at Stanford to get that code and to adapt it to property to show you where the peaks and troughs are in property price. So it's not distinctly that there is another toggle for suburb price based on area. It's finding where clusters of high price are peaking and where clusters of low price are troughing. And it's also seeing how that changes over time. So seeing how that terrain changes quarter on quarter, and that shows you potentially which areas of a suburb are gentrifying over other areas. Perfect example, and a really nice example with the software, is Marrickville. Marrickville went through a period of gentrification and pulling itself up probably in the last 5 years really to Newtown in Sydney, which is its more expensive neighbour. To start with, and for at least the first 3 years, it was only the Newtown side of Marrickville in Sydney that was being gentrified. As you could see that with the software, but you could also see that by walking the streets. It was only that side of Marrickville that was being pulled up by its more expensive neighbour, and the Tempe side of Marrickville was actually sort of left lagging. So the data and the historical sales data and those toggles do show that and do help you with that. So yeah, we've got the sales history there, and we can see that, but then stuff like public housing and crime. So crime was one where we actually spent time individually, state by state and city by city, working with different agencies. So some of it was very publicly available, like in New South Wales, which is great. Tasmania, not so much. We had to work and go to academic sources to see crime data. So we've actually collated that all together, and that's a process we go ongoing. Public housing data based itself in 2011 with ABS data, which is now obviously 4 years old. However, we routinely update that data. So we actually contact and work with local government areas directly to see their changes in public housing policy, and we adapt and modify the percentages of public housing based on those changes in policy. That obviously we do sort of, individual properties do slip through that net, but it's it's a very, very strong guide and very close to current public housing concentrations. So based on the data, there are multiple sources from it. Great tool. Am I able to build my own custom report with this tool? From Arnold. I apologise about the pronunciation. Yes and no. So we do work with buyer's agent clients for custom reporting, so it is branded to what they need. However, and you can turn toggles on to turn different pages on and off in your report. So that's definitely something that we can do. However, what we've talked about tonight is all of the information, I suppose. So it's everything we've got, and we put it all into one spot. So it does come out at around 20 pages of content per property. And you can choose whether to, you know how to read those everything reports, and you can go straight to page 4 or etc. But there is scope for custom reporting as something to talk to me about, I suppose. How does Oak Street Preston stack up, George? Thanks for asking. For the benefit of everybody, I'd love to jump in there. How about we can make a time tomorrow to go through that individually with you? I'll just open up. So it's going to be jumping back. Yeah, later on tonight or tomorrow, and I'll let everyone know, the percentage of public housing in that street and yield and price for that street individually. I won't sort of go into that level of drill down for everyone online tonight, even though it's very relevant, because I might be opening up the gates. But yes, I'll pop out some information to each person that tomorrow around the areas that they want to look at individually, and we can work through that personally. There's another one here around Preston, George. How are villa units with private outdoor spaces valued versus strata units? So they fit definitely into, we've got the differential between, this is George once again, we've got multiple classes of property. We've got terrace property, we've got villas, as you say, or standalone units, and we've got then shared units with shared walls or shared complexes. Then you've got walk-ups. They're all obviously very different. How our sort of work is on a suburb by suburb level. Okay, so we do divide property down the middle, so we do make things simple and look just for houses or just for units. Theoretically, the villas are actually classed as units and they're priced as such. However, if you sort of saw the filtering that we can do based on property type, and you can see potentially where villas are concentrated. So I was working with a client through Glen Huntly in Victoria. All units in that suburb are actually concentrated in the same street areas. We found that pattern, and we were able to remove, all units were, I'll go back a step, all units were clustered together and all villas were clustered together. We were able to remove all units from the map very easily, and we're able to see then exactly the quartile pricing for villas as opposed to units. And there's a couple of ways: removing by area, removing by property type, number of car spaces, the densities, to be able to do that and filter down and get quite reliable. What it's all about is seeing the price spread for that property type, and it might be to first start with removing properties individually or by groups to get to that price spread. And once you know that information, you can then assess value against that price spread, and it will pull back comparables that are most alike to that property to start with. So that's another way of seeing price spread for the different classes of property. But as I say, some suburbs might be valued very similarly for villas versus units. Other suburbs, there might be a 200k differential. So it's a very subjective suburb by suburb analysis that we do there. But definitely, it's something to break down, and it's probably time to do a FAQ video about that, because it's something that's really powerful in being able to do. Okay, so that's the questions that we've got there. Yeah, definitely that offer's available. I'll be popping that through via email now, so that'll be available to you on email as well once we're finished for tonight. If any of you would like to send any further questions through to me, pop them through via return email to any of the emails you've received in the last couple of days, and I'll grab those personally and respond and distribute it out to the group if it's something that is widely relevant. Yeah, that offer once again is a $200 discount, which is once-time discount for coming tonight, and thank you for coming. Free hotspotting report valued at $77, and that one-on-one coaching with myself. So I have limited space in that, obviously, and I do have spaces coming up in the next week and week and a half. And if you sort of that will then extend on further from there, based on capacity, but definitely space within the next 7 days for jumping in and grabbing a big chunk of you and going through one-on-ones. Otherwise, it might extend into the week after in doing our first process together. So I'll leave it there. I really thank you for your time. I hope you've been able to digest a lot of what I've come through and talked through tonight. And if the concepts are new, it might be sort of something to continue digesting together. The property partner groups are great for doing that as a group, and I'm always on hand with any questions. My phone number, email, and contact details are all on my shared emails. And I love talking property, so I welcome any questions you might have. So thank you.